Welcome back to the EGA channel where we plan to trade and trade the plan, guys. I hope you guys are having a great day, and we're here to help you break down this market further. We do the market breakdown so you don't have to do it yourself. Very quickly, before you continue watching this video, I'd appreciate if you could drop a thumbs up, a like, and a subscribe if you haven't for daily market updates. Just click on the bell, click on the like, the thumbs up. That helps our video reach a broader audience, and I really hope that you'll help us with that. We also love hearing from you, so make sure that you drop a comment if you want us to break down a certain ticker. We had two of them on the previous video, and I will be breaking them down today. Will be Riot and Tesla, so that we can continue to get this conversation going. My name's Tushal, and today we saw the tech sector leading the way in the epic fight between the bulls and the bears during OPEX week. We'll be breaking down the Fed meeting minutes, QQQ, SPY, Tesla, Riot, and the tickers that any tickers that we see fit, as well as gold and TLT for market breadth today. So let's get it broken down without a frown and peel the onion. Let's get it down, guys. So looking at the markets today, we have quite a bit of movement that was partly because of tech leading the rally. We had a pretty good-looking move on the tech sector, which is the Nasdaq QQQ, and we alerted some of our Discord community members on some of the potential unusual options activities today within the tech sector. And if you want to learn more about our Discord community and how it works, make sure you click the link in the bio. We have a link in the description that will bring you to our website, which will tell you more about our Discord community, which is a all-inclusive community of like-minded traders. So if you want to be a part of it and receive timely trade entries and exits, give us a try. So on the QQQ today, let's get the QQQ going first, and then I will do the Fed minutes right after. We had mainly semiconductors being rotated into today, which led majority of the rally. Okay, CRM was a very big bright spot today early. It was up about 1% about before market open, and actually ended up about 3% market close. So that was pretty interesting. We saw some money flowing to Google and Facebook as well as Target and Booking.com. We do feel that this is a key pivot point and a point in the market where we have a lot of activity going on. So let me break it down for you guys. The overall trend is still bearish. We see the 20 EMA and 40 EMA still pointing downward, moving to the downside. We have been talking about these key support and resistance points. We actually came down to test this key 316 level today. Went to dip briefly below it, as you can tell from my previous video yesterday, giving you a daily update on this situation. The upside pivot for a bullish pivot will continue to be this 323 to 326 level, which will be the interim resistance for QQQ for the upside. If we do break this level, today or within this week or next week, we will see upside in the market once again. Tech seems to be a leader in this rally rather than QQQ here, and I'll be getting into the into SPY in a little bit. So the possible bounce for the bearish pivot here, if we break below this 315, 316 level here, that will open up the downside into the 300s here with the gap fill at the 302, 303, which I went through yesterday again. Overall, the trend still looks a little bearish, but we need a strong push up from the bulls in order to secure this pivot point back again. As the job market and inflation still weighs on the market. We had the Fed meeting minutes, which I'll be going through in a second here. That kind of changed things a little bit. We had a strong buy up right after the Fed meetings the minutes were announced, and after which, so we weren't able to see effective follow through. But we'll see what happens today to make the decision. Today and this week is really a make it or break it for bulls to secure this back. If not, we will continue to move sideways, as I have been predicting for the past 2 weeks or so. Okay. So let's get all these technical breakdowns down first, and then I'm going to get through the Fed minutes right after. So with SPY, we have us still squeezing into this little pennant here. The upside pivot here is still 413 or 414, this level right here, and this support was broken today. The 410, 412 support was broken today, which was yet another bearish kind of a signal. Okay, this wasn't a very good level for us to lose traction off as bulls. We want to now continue, and well, we did continue to hold the 405 to 407 level, which is a little bit of good news. This long-term 200 EMA on the 4-hour has been a really good support level for the S&P 500 so far. And as long as we can continue to hold the support level, we should see a good upside on this, okay? And as long as we can hold these levels, we will continue to see a push up and bulls secure the market back. If bears can't push below this level, then we will not be able to move downside. And what are the key levels if we do break the 200 EMA within the next week or the next few days? We're probably going to go down all the way to the 400s here, where we have a gap fill right here at the 402, 400 to 403, which I was pointing on yesterday's video, and that will continue to be a level of which we will have to watch and make adequate changes. Okay, there were some very big opportunities on the market today, some unusual options flow, which we alerted the group for, and yeah, it was pretty interesting. So next up, Tesla here. This was requested by one of the followers on the channel. Thank you for commenting on the videos, guys. And also, if you want me to break a certain ticker down, make sure you drop a comment so that we can do it for you. With Tesla here, I like to use you know, this analysis. We've been kind of you know, ever since we alerted you guys on Instagram on I want to say about 2-3 weeks ago, we put out a alert for this on the watch list. We've been watching Tesla for a while. And I think it was almost 2 weeks ago, we mentioned that Tesla was on its way to break from this little downtrend, which now it has made a full downside extension into the 61.8 Fib extension and even further. You can see right here, we have put this out on May 10th, which is exactly 10 days ago. We had a very deep push down on Tesla, which ultimately has come down to retest the Fibonacci extension here. And we're seeing a possible bounce here, but we can't be absolutely sure. One thing that I'm looking at as a possible a catalyst here is the ARK fund, which on the weekly chart is now forming a doji or an indecision candle, which might see a reversal. We do not know yet, but next week will be the key deciding factor whether Tesla pushes up or not, right? So for this week, we still remain extremely bearish. However, remember that after such a big vertical drop like this, there is bound to be a upside wave. There will be a wave up at some point, which will allow Tesla to catch a breath. If we don't see continued push up over here, then we might fade into, you know, the 500 levels below. Even 400s are open here, and all the way down to the 450s, which is the previous levels of support and resistance right here. That will be Tesla's main levels that will open up if we break below the 540 right here, 539, which is the lows of this March 5th. Okay. So that's the analysis on Tesla right here. We will continue to see the price action, and the ARK fund will be one thing that we'll be looking at. Remember that it's all about the cadence with NASDAQ as well, okay? With Riot here, we see a very interesting situation. So yesterday we had a crypto sell-off, and Riot Blockchain is one of the financial conglomerates that actively moves when crypto moves. And yesterday we saw a deep correction. We've been seeing a deep correction with Riot here. And this was also another ticker that was commented on to Breakdown, so I'm doing it for you. Looks like this is a very big basing level. Looks like a demand zone right here. Very strong basing demand zone right here. And it seems to me like a pullback is imminent. We have a downtrend that is formed. This level over here, the $32 level, $33 level, seems like a key level of resistance up from this down wave here. So if we base out and start to move higher, we saw some interesting volume come in also within these past few days, the day before or yesterday even. We'll see Riot possibly make a move up to the 31, 32 levels to test this trend line again. That's a high possibility here. So we might see a pullback here on Riot. If we do break that, then we'll see this is going to be the interim resistance right here at the 33, 35 level. And then after which this is the big, long, medium-term resistance up here. So this is interim short-term resistance. This is your medium-term resistance up here, which is between the 43 to 48, and then upward from there. If we do break and consolidate, we'll see further upside on there. So that's your breakdown on Riot there for you. I hope that helps you out a little bit. Next thing I want to talk about is gold and TLT. Gold with the technical breakout. I've been covering this as well on the Instagram. We alerted you about gold about, I want to say on May 10, 10 days ago when it broke out, and we were looking to capture the 174, 173 6 level here, and we have now captured that level. So gold is now officially bullish as it's broken out and is securing this level, taking it to the upside here in the 190s, 185s, this range right here. It looks like a probable play for gold as inflation expectations are still considered higher. Okay, so you know, taking a 6 months out contract makes sense on this one. 2 higher strikes go slightly out the money. It makes sense. You know, consolidation here just shows strength. I would say wait for a little pullback up to the 173s or back to the 20 EMAs, which will happen, and then enter long on this trade. That's what I'm planning to do. I already entered the initial position. I will be adding more to that position in the next coming weeks. With TLT here, this is another one we alerted on the Instagram and our watch list, which we put out a while back. Let's see here. I think it was on the latest one. We alerted you guys on TLT on inflation play, and you know, we've been talking about this one as well. At TLT, we have a possible Fibonacci extension to the downside, 61.8, 122. We're looking for this extension to occur sometime within the next 6 to 8 months. This is a long swing play on inflation and also bonds as they continue to taper rates. And the federal expectations on these bond rates are supposed to make bond prices depress further, which will cause you know, the yields on bonds to continue to spike here. So this is another one that I just want to continue to update you guys on and keep you in the loop. Remember that today when the market opens, we have some interesting news. We'll have continuing jobless claims and initial jobless claims, which will be higher than usual. Keep that in mind because of the previous jobs report. And then we will also have you know, some other important news, which will be the unemployment numbers for Philly, Fed. Apart from that, nothing else really. And yeah, that will be mostly the important news for this week. On Friday, we'll have manufacturing PMI, which will be also possibly market moving. So we'll continue to cover that as and when we see a opportunity there. We are expecting a possible bounce here, but we'll see what happens with the markets here. And I'll continue to cover this daily so that you can get a good idea. All right. Cool. Let's get into the Fed meeting minutes now. You know, I was reading through this minutes so that you guys don't have to. Let me just highlight the key points of this minutes. Federal Reserve's net purchases of treasuries and agency securities expected to end. They were expected to end the 3 quarters after the first reduction in the pace of asset purchases, which they haven't yet. And the first increase in the target range for the federal funds rate, which is the discount rate or the interbank rate, which we call the you know, the rate, the discount rate for borrowing money. It was expected to occur 3 quarters after that. So now the rate's being pushed back. Other things that are of key from this meeting. The briefing also reviewed considerations that could be relevant for policymakers' judgments regarding whether these arrangements should be permanent. And they're talking about repos here. In case people don't know what repo operations are, those are the operations in which banks use to ensure liquidity to the system. They only can put money into the system by purchasing treasuries, and that's how the central bank works. They can't just deposit money into the bank's account. So what they do is they purchase treasuries, and how banks maintain liquidity is by you know, buying securities from the Treasury Reserve or selling securities to the Treasury Reserve, therefore allowing them to get money out of the central bank. Okay, so that's the main thing of which things are operated based on. Okay, it's your money market, and so they say the staff noted repo operations have been useful to in controlling the federal funds rate by adding reserves to ensure that they maintain ample and limited pressures to repo markets that could spill over into unsecured markets. So the Fed is actually talking about making this operation permanent for the time being, and I think that's a great thing. What that means is quantitative easing is going to continue to be a common theme here, you know, which I think makes sense for liquidity and to ensure that the pipes are plumbed, so to speak, in this economy. So it's important not to just look at technical. Sometimes it's also important to look at the market background and see how the central bank is approaching this. Remember how they control the injection of the US dollar into the system will directly affect the US dollar, and that affects how expensive or cheap equities become. If you have a more expensive dollar, then stocks become more expensive to buy. If the dollar becomes cheaper, then you know, people are more prone to buy equities and put risk on. Okay, so since 2020, overnight repo rates were raised relatively to the rate of excess returns, and so now they're talking about how they want to make this possible permanent thing, which I think is not a bad idea. Other things to note here. In March, 12-month change in consumer price index was 2.6%, boosted by increases in consumer energy prices, while core inflation was 1.6% over the same period. Core inflation, takes out energy and food expenses, so that it's more reflective of the economies without those key things. Manufacturing output rebounded strongly in March following the weather condition disruptions to production in February, and March rise in factory output occurred despite lingering supply constraints, as they say here. Damaged facilities in Texas due to production of petrochemicals and plastics, and they have not been fully repaired, and semiconductor shortages were still weighing on the market vehicle production. So these are things that they are watching as well. These are things that we watch as well as we are breaking down markets here. RIOT overnight index swap quotes suggested that the expected path for the federal funds rate was little changed over the intermeeting period, and that expected policy rate would remain below 25 basis points until the first quarter of 2023. So we're not expecting a rate hike until 2023 first quarter for now, okay, depending on how the economy performs. All right, and that was another key thing to mention there. Staff economic outlook from the Fed. However, with monetary policy assumed to remain highly accommodative, the staff continued to anticipate that real GDP growth would outpace that of potential over much this period, leading to a decline in unemployment rate to historically low levels. So they're expecting unemployment to decrease, which means that they want full employment as soon as possible. I mentioned this many times before now. The unemployment rate is one of the most important things that we have to watch right now, because it will signal how good or how well the economy is doing. And once we see this happen, then we can understand that the pent-up demand will actually set in. Right now, there's a lot of assumptions and a lot of expectations, but we need that to really, really clear the bottleneck, right? And the staff continue to view the risks around inflation projection as balanced. Upside bottlenecks, supply disruptions, and historical high rates of resource utilization were seen as potential sources of greater than expected inflationary pressures. So remember, I've been mentioning this over and over again. When COVID happened, a lot of supply chains got disrupted, and to fix those supply chains require additional money. And now, because of that additional money being spent on those supply chains, we're looking at possibility of increased prices of various supply chain disruptions, which are causing bottlenecks. The increased demand is not going to help this anymore, because with lower supply and everybody wanting the same thing at the same time, that's going to cause increased prices. And that's what the transitory inflation, which the Fed is talking about, is supposed to be about. Okay, so alternatively, the possibility that inflation would be held down by low underlying trend inflation and weaker than expected response to resource utilization was seen as an important downside risk. So they're talking about the fact that if inflation were held down by lower expected response to resource utilization, then that would indeed be a downside risk, because then it would signal that the market's actually underpricing the majority of these assets. And then I think that's all that I wanted to highlight. Yes. And so then the end right here, we have the actionable insights from the meeting, which is just mainly to keep the federal funds rate between the target 0 to 1.4%, 0 to 0.25%, which is the nominal federal funds rate right now, and then continue the repo rates. Yeah, that's pretty much it. Engage in dollar swaps, blah, blah, blah. So that's your Fed meeting breakdown here. I hope that you enjoyed that one. And if these are helpful to you, make sure you let me know in the comments. I really enjoy making this content for you guys. In the meantime, apart from that, there's not much else to discuss here. But in conclusion, I just want to, give you guys a little bit of what my market analysis would be. Right now, it is so important for us to continue to see the market hold these support levels and continue to see more unusual activity, more institutional flow, more dark pools, and increased activity in purchases between all securities. And once we see that, we'll have a green light to get into long positions further. Right now, holding these key levels are so important, because if we don't hold these key levels, which are, for example, QQQ with the 316 and SPY with the 410, 412 levels, this will open up downside risk in the market, and we don't want that. We want to really have these levels being held, and those will be the key things that we have to look at. Tech sector is also leading from the bounce, which gapped down today, right? And it remains in a critical position to possibly retest some lows. So SPY remains above critical support levels and continues to hold. However, is being constantly barraged by like thermonuclear bear rockets to flush out all the weekends. And so you have to be really cognizant about how this goes on. If we break these key levels and start to hold below them, then that's going to open up the downside. Now, this is exactly the reason why it's so important to do top-down analysis. Even though we're looking at this on such a a smaller time frame, we have to look at this on a daily basis and also the weekly and monthly basis so that we can see the overall trend. If you look at SPY on the weekly, it still is bullish on the weekly chart, right? Still bullish. And on the daily chart, we'll see a lot of fluctuations, especially since it is OPEX week. So we'll continue to break down this market for you guys. And remember, this is a pretty hard market to trade in. So, this market has been really screwing investors and traders left, right, center. Definitely not a market for amateur traders. Multiple flushes up and down. Really great for day traders who know how to scalp. So stick with scalping, stick with, quick in and outs, momentum trades rather than sticking with the swing trade at this moment unless you know what you're doing. And I hope that the trading plan and planning the trade helps you out. Once again, if you enjoyed this content, make sure you like and subscribe, and I hope that you have a great day. I'll see you back for tomorrow's video. Peace. Take care.